Good morning and welcome back to Almus Market Mornings. This episode doesn't really need much of an introduction. The longest awaited update, something we've spoken about almost every week for close to a year, finally came through last night. President Trump announced that the US India trade deal has been signed. That said, some questions remain around the fine print, particularly whether the reciprocal tariffs on Indian goods have been cut to 18% from 25% and the additional 25% duty linked to India's purchases of Russian crude has been fully removed. Good morning, Shikhar. The deal is finally done, but is this the start of something bigger for the Indian markets?
Hey, hi, Ishan. Good morning, and good to be back. And yes, indeed, it is without a doubt one of the biggest positive updates for the Indian markets, and no wonder markets have reacted the way they have. I mean, look at Rupee trading stronger by almost 1.5%, Nifty showing more than 2% higher in the offshore markets. Now, there were, like you mentioned, initial some doubts on the penal tariff, which has been removed by some, as mentioned by some of the media participants. And obviously, I mean, there's no logic to keep penal tariffs when reciprocal is being reduced. And as the commenter mentioned, Trump says that India has agreed to stop importing Russian oil, which I think, like you mentioned in the fine print, will be cleared over the period of time. And this news coming on the heels of mega deal with the EU should be viewed as a massive relief and a boost for the Indian economy. Uh, just after the budget updates. And although there were some negative reactions for the budget due to the rise in ST and other irrelevant updates or not so significant updates, but this one will be taken as a big positive for the market participants. Now, the question for forex players is how much will the rupee strengthen after such positive updates? And just to give you some perspective, rupee was trading at 87.5 per dollar when the penal tariffs was imposed. But do we think that we can see certain levels, some levels like 87 and a half? Uh, it must be seen over a period of time, but looks difficult as 90.50 in itself technically looks as a good support zone, while around the 90 figure mark, we can expect the PSUs to come absorb the selling a little bit. Having said that, we should also not forget that 18% tariff is still in place and which will continue to impact the overall export volumes on the annual basis, likely to bring about a dip. However, it is imperative that the central bank will not let the rupee run away to the upside quite significantly. At the same time, we've known that the market has been one-sided for a very long time, and with a lot of importers covering and exporters not really being active in the market, the trend can see some bit of a dent, and we can see some FIIs flows as well coming in, which were held back uh, as it was always seen when the rupee is depreciating. For the more medium term one, should we see whether we start getting FDI flows related to setting up of data centers, as we mentioned in the budget, or for which many big global tech majors have plans. It is to be seen. The budget has provided them with the tax holiday for a period of 22 years, but uh, it needs to be seen how and with what intensity would they be coming in and what sort of flows will trickle in. The point is, when all these flows surge, whether RBI will continue with their hands off approach as they were when it was depreciating, or will they start accumulating reserves that they've lost earlier in maintaining the current slide of rupee? I feel they would do come in and at certain or some particular level when the market gets way to one sided. Now, this was more on the domestic market and the India US deal, but there were also good amount of updates on the global markets. Commodity meltdown, kind of took a breather or slowed down in yesterday's trading session. And after seeing the uh, amazing moves in the uh, gold, silver, and copper, and likewise other metals, we've seen the much of these falls, or rather volatile moves, had forced unwinding due to margin pressure and the MTM losses. The market looked relatively cleaned up as of now, uh, and we should see some gradual consolidation or pickup in prices in the line with fundamentals, especially or particularly for silver. For gold, the central bank actions will be the key because they've been the biggest players in the history for the past few months. Overall, dollar trend will also be determining the factor as when and how far the recovery happens. As of now, $4,400 per troy ounce for gold and $70 for silver are very good support zones. And on the broader dollar or the major pairs, we've seen major pairs have been weaker against the dollar, continuing the retracement started late last week. Dollar was further boosted by a very strong ISM manufacturing report. Importantly, the employment index also jumped from 44 to 48.1, and the new orders surged uh, from 47.4 to 57.1. Now, these numbers look quite good, and not surprisingly, which also led to the yields, up in the range with the 10-year trading at 4.28. US stocks also surged more than 1% on the good economic news, which kind of overshadowed the improvement seen in European zone and the UK PMI manufacturing. We also had the Bank of Japan meeting. Now, policy board Bank of Japan meeting minutes released. Now, the policy board meeting minutes showed they were more hawkish than before, with more the members thought that BOJ is behind the curve in inflation fight, and the appropriate time to hike if economic projections materialize will be sooner. BOJ should not be seen to take too much time deciding the next hike, and the inflation has started to become sticky. Are a few updates that we can make out of the current minutes. All in all, this week looks to be hectic, Ishan, for the markets as we all participants head into four central bank meetings, as we've been discussing over the period of time. We have Australian central bank meeting, UK central bank meeting, ECB, and our own domestic central bank, Reserve Bank of India's meeting. Now, the key jobs report, very important from the US rates perspective, is, however, not likely to be released on Friday due to partial government shutdown, which was being anticipated earlier. For the Indian markets, it is going to be even more hectic as Rupee is expected to move around, with stocks and FII action will be much in focus after the landmark update received yesterday, and which will be followed up by the RBI meeting. What do they do in the background of the budget and this very important update? Will they be easing the rates to complement the government's push for growth as the inflation stays lower, or how would they continue with the current path? I mean, as of now, uh, we don't really think that there'll be much of rate actions. Keeping an eye on the global trends and oil prices, you never know, they may decide to surprise and indicate a cycle bottom. So these are the few things that we can enlist for the day to day and the actions that we can anticipate over a period of time. Having said that, financial markets are known to bring in a lot many surprises. So I think we should be geared up for the kind of moves that can come in with the significant updates that we've been receiving over the period of time. That's it, Ishan. I think I've covered much of the bases.
Thank you, Shikhar. And just to summarize, the markets dive into what is arguably one of the most positive developments for India in a long time, with markets reacting sharply. USD INR stronger by nearly 1.5% and offshore Nifty up by almost 2%. This news has effectively wiped out the negative sentiment that followed the union budget, including concerns around higher STT and capital gains on buybacks. While some uncertainty remains around the complete removal of the penal tariffs, the broader signal, especially alongside the recent EU deal, is a significant relief for the Indian economy. The key question now for the FX markets is how far the rupee can strengthen, with 90 or 90 half emerging as an important zone amid expectations of PUC bank absorption and possible RBI reserve building. Globally, markets remain event heavy as commodities saw some forced liquidation ease, with gold and silver stabilizing near their key supports, while the dollar strengthened after a blockbuster US ISM manufacturing print that pushed the yields even higher. The equity markets globally responded positively, adding to the momentum to the Indian stocks hopefully today. And with four major central bank meetings this week, when it comes to the RBI, ECB, Bank of England, and the Reserve Bank of Australia, alongside the critical US employment data, volatility is likely to stay elevated. For India, we have to look out for the FII flows, rupee movement, and the RBI stance post budget will be closely watched, especially mid speculation on whether policy easing could be signaled or if global risks keep the central banks cautious. Thank you all so much for listening, and we'll catch up tomorrow with a fresh round of updates.